This Tuesday's real estate tips, we're going to talk about capital gains tax. For all of you people that are out there selling for heaps of extra profit, let's talk about what you're going to do with all the tax that you're going to pay. One of the misconceptions actually about this, which I didn't really know, is everybody has this thought that they're paying 50% in capital gains tax. I want to clarify that it is 50% capital gains tax, but it's not 50% rate. So I'm going to explain to you how it works. Hopefully I'll be able to explain it in a way that makes sense. So basically, the tax rate for capital gains is not 50%. The income inclusion is 50% of the capital gain, with the gain taxable at your marginal tax rate. So basically, it's based on your income. So if you're at a high tax rate, you're going to pay more tax. So let's talk about this as an example. So in BC, someone that makes $25,000, which of course is not very much money, but if they're making $25,000 income, and let's say they sell their property for $100,000, the capital gain tax would be about $12,804. That's 13%, not 50%, on their capital gain. That same $100,000 in Ontario for someone that makes $75,000 a year will be $19,859, which is a 20% tax. And in Quebec, someone who makes $150,000 of income will pay $24,985 of tax, or 25% on a $100,000 capital gain. So depending on the province that you're in, and let's not even get into US regulations because that's a whole different ballgame, but because I'm Canadian and in BC, I definitely did some research on how it works in BC. So it's maybe not robbery after all. I mean, we do have other taxes like foreign purchase tax, which is far more than capital gains tax if you check out what you're actually paying as a foreign purchaser. So let's talk about some ways to mitigate it and to have some savings, because we all like to save money, and there is no avoiding paying tax. So let's figure out ways to pay less of it anyway. So one is there are certain exemptions actually for capital gains tax. Small business corporations, shares, and farm properties are subject to some exemptions. There are certain conditions that apply. Please go and check. I'm not a registered accountant, or talk to your accountant. Don't rely on what you see on the internet, even though I'm here right now telling you, but there is a lot of old information out there, and of course things change all the time, as we all know. So make sure that you're getting up-to-date information and pertaining to your specific circumstance and your province. Number two, we're going to talk about the biggest one, which is RRSP. So I don't know about you. I know that my investment still has room as far as my ceiling of ability to contribute to my RSP deductions. So if you're selling a property and you have gained quite a lot, more than you really want to, you can defer some of that by putting it into your RSPs. Even if you're retired and you're not working any longer, there's still an opportunity, if you have some room, for your RSP contribution to put it there as well and have some savings that way. So as long as you have a spouse being 71 years or younger, I believe that you can do that. Once you cross over the 71, then there's probably some other rules that pertain to that you might be able to get away with, but I'm not sure what those are. So now let's talk about passing real estate along to the next generation. So there are some ways to put what's called an estate freeze. So you can always lock into a parent's deferred capital gains and have future growth accrue to the children. But depending on how the freeze is implemented, it may result in some tax now, and which will maybe save you some tax later. So the bottom line is capital gains is payable eventually. So even if there's ways to defer it for now, eventually you will have to pay capital gains. And the bottom line is, my dad always told me that if you're paying capital gains, that means you gained something. So if you're investing in real estate and you have to pay capital gains, then you're in a really good position because you didn't lose money on your real estate investment. And right now I can tell you, the way the sales are happening, nobody is losing any money on their real estate investment. And so congratulations to all of you that made good investments. And if you have any questions about what I talked about today or any other real estate tips that we do on Tuesday, please reach out to our team. And I hope you have a great, amazing week and make lots of money.